It has been another active quarter for HydraLyte North America, headlined by the positive trend in quarterly net sales, ongoing reduction in outflows, which has left the company in a position of zero debt, and the appointment of experienced public company executive Joseph Constable to the board. To discuss these developments and to delve further into the numbers, I'm joined by HydraLyte CEO Oliver Baker. Ollie, thanks for joining me, and the floor is yours.
Good on you, Alex. Thank you for that. Yeah, thanks everyone for tuning in. Quick update around HydraLyte. It's an opportune time to connect with shareholders. It's the end of Q1 and an important quarter for us, given we've just completed the divestiture of Canada and rest of world. So before I jump into the quarterly, I thought I would share a little bit of a company history, and that'll kind of set the scene for where we're going. There's been these big changes over the last few months. So important to remember that HydraLyte, we were really the international arm of HydraLyte Australia. We controlled rest of world, and up until October last year, that really meant Canada and the USA. Canada was a larger chunk of the business. We're a market leader there. But during last year, in the lead up to that sale, we did a lot of radical changes in the business across both Canada and importantly now the US to what we would say clean up a lot of things, delete unprofitable retailers, exit poor performing SKUs, and really only leave us with the best and brightest as a portfolio across products and now our team, which has reduced significantly as well. As of today, we are focused on the US only. That is still the biggest market in the world by far for this category. A couple of $1 billion still up for grabs, so something very exciting for the future. Quick reminder of investors that we built a business over $11 million over the last 5 years or so. Significant growth in sales, significant growth in gross profit. So we know how to do it, and we've been doing it for a while, and now we get to set our sights firmly on the US. Having Canada always firing in the background meant we inevitably focused our attention on that, but now we're US only. There's a lot of excitement to come with what we've built in the last couple of years. So turning our attention to the quarterly results, net sales of $720,000. That creates a business now that's run rating at $3 to $3.5 million US a quarter, just on our run rate. And that's obviously excluding any significant growth in the business. Importantly, we've built our gross margin up to be a really healthy 60 plus points going into this year. So we're keeping a lot more than what we used to in terms of gross margin, and been lucky enough to have Joseph Constable join the board as well. He came in with a significant investment, and we matched that with a rights issue to give our existing shareholders an equal footing to the way Joseph was coming in. He's obviously written a significant check, and we're delighted to bring him to the board. His wealth of experience across public companies, and that's an area of bench strength we want to really build, is work on our corporate strategy to build shareholder value. We've cut cash use again by another 15% from the same time last year. There's more cuts to come. Importantly, 3 more staff of ours, unfortunately due to the divestiture, finished up with us at the end of March. So there's another step change in savings that have already been banked that you're not seeing yet, that start literally from the 1st of April. So we're really excited about what that means for the remainder of the year. The US business is more profitable than ever. There's further cuts that haven't been realized yet. And so we've got a really strong bank balance now of just a fraction under $2.4 million. While we burnt 700 last quarter, even at that rate, we're almost at a year's worth of cash, and we're continuing to cut that down and down. So significant savings expected in the coming quarters. So the business now looks like this. The 3.5 million roughly in sales is split 3/4 online, a quarter retail. Our focus is on the Amazon business on the right. That's where most of our growth is coming from. That's also where, there's multi-$100 million of category opportunity there. But importantly, at low risk. Amazon is a low risk channel to trade with because you only need enough inventory that you're able to sell straight away. You're only really keeping, 4 to 6 weeks inventory in there. You're not loading stores across the country. You're not making massive bets on sales and marketing and inventory initiatives that are expensive, and while, can pull off, if you don't get it right, cost the company a lot of money. So we're in a profitability phase at the moment and building phase, and we're building around a couple of wonderful SKUs on Amazon, and that's where the future lays for us. The most exciting product in our portfolio is this SKU, though. It's part of our Hydration Plus liver support, originally designed to tackle the large hangover component of the segment. What's really drawing consumers to this product, in addition to hangover, is a switch to healthy lifestyle. So everything from poor diet, not enough exercise, drinking alcohol, eating other processed foods, All these things put pressure on our liver, and having a daily regimen of electrolytes as well as an herbal supplement with milk thistle to aid liver support is what's brought people into this product. And it's now tracking over $150,000 a month in sales. That's well on its way to past $2 million, just this one SKU. So this is really what's underpinned the change in the profile of the US business. It's our best seller. It's our highest margin. It's got the best return on marketing, and there's more to come just like it. So this is a good kind of outline of where we're going from a new product point of view. The old range, so to speak, from Australia, exceptional business in Australia. Same range thrived in Canada, but it never thrived in the US. So we had to kind of evolve the brand and take it to the next step. That's what was the foundation of Hydration Plus. Liver support rose to the top with that. We rebranded that range, and we now have 2 more products coming out in the coming quarters anchored around gut health and brain health, which are really exciting for us and encourage consumers to make it part of their morning ritual. So they're doing it every day. It's not just an incidental thing, whether you're sick or hungover or you're working out. It's the kind of thing you do every morning to make yourself feel at your best. So importantly, as a company now, it's a really simple snapshot. The company's valuation is sitting, this is all in US dollars, by the way, as a reminder, company valuation sitting almost less than $2 million. We have more cash in the bank than our current trading value. So irrespective of our cash burn, it's an incredible profile given that we are baselined at roughly 3 and a bit million in sales. We've got declining cash burn. Our best SKU is growing at 40%. We have similar margin profile SKUs coming out in the coming quarters, and there's unrealized cuts that aren't showing in those numbers. So there's another step change in savings immediately coming, notwithstanding growth that's coming now into the business. So more customers, retail expansion, new SKUs, none of that is realized in this business profile that you're seeing at the moment. So we're as optimistic as ever, and we hope that people are able to see what's kind of remaining and the opportunity that's there. Business has always been this North American thing that's had catapulted onto it, but now we're single-minded, all in US, and that's allowing us to go after something really exciting, and we've got the cash to go do it. So that's it from me, and thank you for listening.
Ollie, I really appreciate your time. Thank you for your insights, and all the best.
Good on you, Alex. Thank you.